look at the S&P 500 as we end September week 4 and get ready to trade October week 1, 2020. Next week we have a debate between Trump and Biden on Tuesday night. And then on Wednesday is the final trading day for September and Q3. Trades that take place on Monday will settle in Q3, and September and all the trades on Tuesday and Wednesday are just going to settle in the next month and the next quarter. So today, here's our Friday candle to end our week, and we had been selling off overnight and got down to a low in pre-market that would have held us above this low that we set on Thursday. But still, it's kind of uncomfortable looking at these constant sell-offs that we walk into that happen overnight because things are not going well in Europe with COVID. And anyhow, we made a higher low, and we reversed, and we wound up with this rally on the day that took us all the way back up above 3,300 at the high of the day and closed just off of that, just below 3,300. Here is our 10-day simple moving average coming down very quickly over our heads. It's going to be right down around 33.18, 33.19 on Monday. So as we come in on Monday, if this rally is real, if this turnaround at the end of the day Thursday followed by Friday is going to be held on into the beginning of next week, and maybe this is an end of the quarter, sort of buying the dip and painting the tape at the very end of the quarter, because like I said, these trades are settling in September here, and the last one is on Monday, then maybe we're going to follow through and we're going to take out this 10-day. And if we take that out, we're going to go right up and take out the 50-day as well and close at least up here. If they really want to put on a show, we'll take all of this out and close above our 20-day. But then come Tuesday, the behavior might change. So let's just keep that in mind on the calendar. When we back it out and we look at the grander scheme of things, we see that right now we've been holding right around our 2020 positive level and right around where we were trading at the end of July and the beginning of June. We've held above the 100-day simple moving average on our dip and above this big block of numbers that would take us down to the 10% on down to maybe about 15% down off of the all-time high. And this is all of the July levels down here. Once we get below the 32.84 level, we go into a bearish engulfing state on the monthly time frame because we're trading below the August low, and we just start trading through these July levels. So if this is just one more day of upside, and maybe we come in and we just look above the 10-day, look below the 50-day, fail, and come down and close below the 10-day again on Monday, then I really do think that was just a set of 3 candles to kind of put on a show to end the month and the quarter, technically, and that maybe we're going to roll off and sell again Tuesday and Wednesday. So let's see if that follows through. Here's our weekly chart. We've had 3 red weeks in a row, and finally we put in a green week this week, only in the fact that we closed above where we opened, so it turned the weekly candle green. Still, we closed below. We filled the gap to last week's close, but we closed well below last week's close. We did come down and touch the 20-week simple moving average on our low for the week. And as you can see, here we are, dipping into these levels that we traded at the beginning of February, that we looked above in June, and that we settled around on in July. So if we are going to break here and sell on off lower, we might wind up with a hard time trying to get back up above here for a while. So maybe that's what's going on, is they're just trying to get some business taken before we close, below 3,200, and then don't see the top side of 3,200 again, maybe for the rest of the year. Maybe that's the worry. But if we do sell off down below it, we've got their 200-day simple moving average, which is about synonymous with the 50-week simple moving average. So let's see how all that works out, if that makes any sense. Anyway, let's take a look at what happened with these quarterly puts and calls today. We were looking at these 3,200 S&P quarterly puts yesterday, Thursday. They were well above $11 yesterday. And I said if we got to 32.84 or so, they would fall to the $11 window. Well, they did today a little sooner than that because decay got the best of us. And look at where they closed. They closed holding just above the $5 window. They moved about 5,000 of those, although in 9,000 open interest. Another one that was really active today were these 32.10 puts. And then over on the call side, you can see there was a pretty good movement of these 33.50 calls. But to my mind, I mean, unless we're going to get that big foamy move all the way up here, above the 50-day simple moving average. I don't see the reason to buy a call that far out of the money. To get all the way to 33.50 would be quite a feat. But if we make it above that 50-day simple moving average, you can see that these call buyers, had it in their heads, because they moved almost a little over 2,500 of those on Friday. And then just looking at a chart of the 3,200 puts, those were our big pie in the sky thing that we were chasing yesterday, Thursday, as opposed to today. You can see here's a big volume move of them around 2 o'clock Eastern time. 1,500 alone in volume moved for them right here at this point. And you can see it was a big red candle, which always kind of signals to me, and also the price that they were at. They were feeling the $11 window here, and they just moved quite a bit of them, and the rest of the day they fell down, making a low at 584. So if that was a fake move at the end of the day on the S&P, maybe these 3,200 puts holding the $5 window will have been our tell, or these are just on their way to zero because they are being shorted. And this big move here was just a big short sale of them, and you can see the price move down for the rest of the day. Okay, so I hope that all makes sense. Just going over it one final time. We got to come out of the gate strong and get above and close above the 10-day simple moving average on Monday, followed by the 50-day. We don't have to take out this 20-day, but I think if we get above the 10-day, fail to get above the 50-day and come back down, and then break back below and close back below the 10-day simple moving average, I think it'll just be some sort of an ominous tell for an end of the quarter move that was just fake to begin with, just to get numbers improved on balance sheets for the last settlement days of the month of September and Q3 2020. Have a great rest of your weekend. As always, good luck and good trading.